We spoke to Eugene yesterday, Eugene Chen, a little bit about the latest CSRC rules and consultations. And I want to get your take on what this all means for UBS. There's a sense that maybe, as Eugene had mentioned, that this could help and spur more overseas listings. But what are your main concerns about these consultations and how it can impact your pipeline?
Thank you, Yvonne. I guess China is a very important market for us, not just for the banking part, but investment bank as a whole, and also for our group as a whole. So overall, I think the regulatory changes and the reviews will take its toll on offshore listing for maybe another 1 or 2 quarters. I think we've gone through some of these cycle changes in the past. But thereafter, I think it will resume. We've already seen some draft rules coming out. Of course, the implementation will still take some time. But again, we've seen these cycles before. And I think the innovation, the wealth accumulation, and the size of the market will make sure that this is a very important market, both for UBS and other investment banks in this region.
You said you've seen these cycles before. I'm just wondering, does this regulatory crackdown that we're seeing, not just from China, but also in the U.S. with the SEC and implementing their rules when it comes to Chinese listed companies in the U.S., do you think it changes in any way the environment right now?
It is challenging in the short term. And I think you have to put it in the macro context as well. So, of course, on the one hand, there's the pandemic, which is affecting the economy. There is the monetary tightening potentially coming from the U.S. There is some of the geopolitical risks that you mentioned, and the regulatory changes in China and the risk surrounding the property sector. So I think the overall, for the banking side, on the primary side, the atmosphere overall will be cautious in the first 2 quarters of this year. But I'm quite confident about the medium term because of the size of the market, because the innovation that is still ongoing. And China is very focused on driving some of these changes. ESG, China has set very ambitious goals. So that will drive through a lot of the investments and changes in the market. So on the medium term, I'm very hopeful that we'll go back on track, and particularly both on the banking side and the market side, that China will remain very important for us.
The recent shutter of your global banking business in India, can you talk us through what led to that decision? And is this a signal that you're adding more resources to China?
No, I think we look at our portfolio all the time. Different banks have different strengths in different parts of the region. We can't be all things to all men in this region. Overall, APAC is very important for us. It is one of the most significant growth region in the world. And we have within our strategy to grow APAC contribution further, whether it is on the new economy side, whether it is China domestically, but also ASEAN is a very important part of the region for us. And ESG, of course, with our wealth management and asset management colleagues. So a lot of these divisions are working together, investment bank, asset management, wealth management. So we need to concentrate our strengths and focus our areas. And that's why we have some adjustments in our portfolio. But overall, our overall direction is still very, very clear. We want to grow APAC. And of course, China is very important for us.
Yeah, can you talk a bit more about those adjustments to your portfolio? Are there any other onshore global banking businesses that you're seeing that need to be either shut or scaled back at the moment?
We are very happy with where we are. I think this is how we want to approach 2022. Within that, there will be key areas of growth for us. Of course, China will be very central to that. As global funds and investments still continue to flow into that market. we've already seen overseas holding of bond and securities doubled over the last 3 years in onshore equities and shares and fixed income products. And I think that trend is not stopping. So we need to continue to invest, particularly on the system side for the markets division, and on continue to hire for the banking side. So that's how we are going to set up our investment bank. But as I said, China, APAC is not just about China, but it's also about the whole other region, including ASEAN, including Australia, Japan. So all these are important markets for us.
Walk us through a little bit more. You mentioned about hiring in some of these key markets. Maybe flesh that out a little bit more, and how are bankers impacted by some of the scale backs that you're doing as well?
I think that the scale back is very minimal. I think all investment banks go through adjustments throughout the life cycle. I think there's no question the pandemic is also taking a toll on staff who have to work from home, who have to suffer from travel restrictions. So all these things are important in how we take care of our staff. The well-being is very important for us. And of course, at the junior population, we need to continue to maintain the morale. And there are many important areas that outside of banking. So we need to maintain a work-life balance, particularly for our younger staff. And in China, in particular, I think the talent for war is very severe as foreign firms continue to rush into the market. We need to make sure that we remain competitive, both against the domestic firms and the international firms in keeping of our good talents.